Hello everyone and welcome to the Nomad Hedge. In today's video we're going to take a look at the S&P 500 and see if we can find potential resistance within this new bear market rally we're currently finding ourselves in. But first, if you're new here, consider subscribing to this channel and hit the like button if you're enjoying the content in this video. So let's get into it. So we started out with this bear market rally here 2 days ago, and the lines of resistance that we're currently watching right now are obviously going to be these key moving averages here. Now the green line here is the 50-day moving average and the blue line here is the 21-day exponential. So once we're above these moving averages, the next line of resistance is going to be this open gap right here, which is also almost converging here with the 150-day moving average, but this open gap needs to be filled up at some point. Now, it would not be a surprise if we saw some minor profit taking here as well before reaching the next line of resistance, which is going to be this trend line here. Now, this trend line here goes back all the way from January 4th, and as we can see here, this is also sort of like converging here with this 200-day moving average, and therefore it would not also be of a surprise if we saw some minor profit taking at this point as well. But obviously the ultimate and the last resistance that I'm currently watching and having a target on is going to be this trend line here, which is part of this big bear flag that's been building up for months here. Now you might be wondering, okay, why specifically this point right here? If you take a look at this vertical line here, for instance, this is the date we're getting the 75 basis point increase or the 50, right, from the Federal Reserve. So that's going to be on September 21st. And the market's pretty much pricing in a 75 at this point. And the catalyst that I see for this bear flag to play out and to become validated is if we seeing a deep sell-off. And that would mean that we would also break below this higher low here from the June lows. So if we would break below this this bear flag here, that would also mean that we would close this open gap as well. Now at this point we would also be nearing in this the June lows here, so we could potentially find some support here, or even worse if we would go below it as well. But I don't want to speculate so much into the future. I do want to have a target here, and this seems to be a reasonable target for this bear market rally. Now you might be wondering, okay, how do you know this rally actually has some legs behind it? And in order to figure that out, we have to look at the indicators. To start out, we do have the RSI here, and as you can see, we've been pretty much oversold here just in the beginning of this rally as well. So as soon as we found support here, this indicator was oversold. And previously, whenever the S&P has been oversold, we've seen buyers stepping in. Okay, so right here we are also seeing buyers stepping in due to the fact that the sellers have been so strong, and we found support at a critical level here. And the next indicator obviously is the volume bars, right? So here we actually closed above the 50-day moving average, showing some signs of move behind this rally as well. But the interesting indicator that I like to look at is the money flow. So we haven't made any new lows here, and this thing has been on the rise, and previously this thing has just been, you know, on a steep decline, even though it was showing signs of decline here when we even topped here just below the 200-day moving average. So this is also showing some signs of exhaustion. And next thing obviously is the MACD, and the MACD is showing signs of increased momentum here. And one thing to notice, we are nearing a buy signal as well on the MACD, so that would also trigger off the algos and maybe the retail investors foaming into this rally as well. So that could be interesting to watch, getting a buy signal on the MACD. But if we take a look at the ADX, for instance, one of my favorite indicators, it was showing some early signs that buyers were stepping in, right, even before we found support right there on this critical trend line. So this is the way I look at this, and eventually for this bear flag to play out would be on the lines of this, and that would also mean that we would close this open gap right here. So the lines of resistance, again, it's going to be this these MAs here, and possibly this open gap right there, crossing above the 200-day moving average and finding some sort of resistance there, but ultimately this is the target. So I am aiming at this, and the reason being is that I don't see anything bullish about this market. So the Fed is tightening, they are doing QT now, and they're moving liquidity from the markets, they are raising interest rates, they're continuing to do that. So every time the Fed is in a tightening mode, you don't want to fight them, but you could take advantage of some rally, some bear market rally. They happen sometimes, they can be very volatile, and you can actually make some money when they occur from time to time. So this is the way I look at this, and I thought this was just going to be a short video, but I hope you enjoyed it, and I'm going to try to post and keep you guys updated. So thank you so much for watching, and I'll see you guys in the next video. Take care for now.